Hi guys, this is Martin. It is Sunday afternoon, just after the 5 o'clock. Well, it's closer to 6 o'clock. I'm doing this video, and the markets have already opened, but it is May the 31st, and we're going to get ready to do another update for trading opportunities the upcoming week for June the 1st to the 5th. Looking forward to that, and wow! But first of all, what a crazy, crappy day this is today. I mean, Mother Nature has really thrown a curveball, and I mean, it is one of the most terrible days that I can remember. I mean, temperature is really low, raining all day. I mean, wow, what's going on? So let's cross our fingers and hope that this upcoming week is much better temperature-wise. We want to see the sun again. We want to enjoy the outdoors, but work is work, and that means getting onto your computer and taking a look at trade opportunities with me. And so let's take a look and start with the very first pair, and that is the Euro. Okay, this is the Euro USD daily. You can see that right here. We are in a major downtrend. Or are we? Is this a false breakout to the downside, and are we going to be heading up? I really don't think so. I think overall the major trend is going to be down again, and you can see the MACD here is below zero. And the interesting thing is, last week I mentioned that we want to wait for price to either bounce off the resistance area right here and wait for bullish evidence to the upside, or we want to see if price could close below the support area. Price actually did that, and if you would have done that, you would have gotten in on a trade just below the 50 SMA, and you would have made some pretty good pips to the downside. And right now, price is actually reversing back again. It's retesting the previous support, which is now resistance. The 50 SMA is also acting as resistance. So we want to, again, wait and see. This one, we want to wait to see if there's any bullish evidence to the upside or bearish evidence to the downside. I believe price is going to go down, but what we want to do is wait for a candle to close just below the 109.24 area. So we want to wait for a candle to close below the 109.24 area, which is right there. You can see that with my pointer. And if it does, then price is going to come down to the 107.20, 10700 area. Okay, so that's what I expect with the Euro USD. Just wait maybe a day. Sundays are not terrific trading days. I normally don't trade on a Sunday, and that's why I can put together this video. So kind of just wait and see on this one. Okay, the next pair is the British Pound USD daily. Okay, with this pair, we are in a downtrend. Obviously, you can see that today, but last week, price was right about here, and I basically mentioned that you wait for price to break the 154.45 area, 154.40 area, and if price broke below that, it would actually come down where I thought price would come down to the 152.36 area, and believe it or not, price did actually come all the way back down to my predicted level right here. So that's pretty good, guys. If you would have taken the trade, see this candle right here, this bearish black candle, you would have gotten in at the open of the next one, and let's just draw that in. You would have gotten in right about there and taken price all the way back, all the way down. You would have made approximately 140 pips, and that is terrific because I just want to show you something else. The risk to reward, your stop loss would have been about here, or maybe a little bit lower, and you would have made definitely for sure 1-to-1 or a little bit more than 1-to-1 on that particular trade. Okay, so now where do we go from here? Well, I actually expect price to keep going down lower. down to the 151.80 area, which is the next level of support. You can see that right there. However, wait for price to go up a little bit higher, so sell on rallies. So wait for price to go a little bit higher, and then you can take a sell trade again, or wait for price to break below here for price to continue going down lower. The MACD is below 0. Okay, next pair we have the Australian USD daily. Okay, last week I mentioned that we want to see if price could break the support area. And remember, last week I mentioned all the pairs were at their respective support and resistance areas, so it was a wait-and-see situation, and that's happened with most of the major pairs. They did actually break their respective support or resistance areas. In this case, the Australian US dollar did break below this gray rectangle and below the 50 SMA, which you can see in this orange line. And if you would have gotten in the trade after the close of that candle, right here at the open of the next candle, you would have gone down lower and made some pretty good pips. In fact, I said if price closes below the support, price would actually come to the 7,700 area. It actually went well below that. So again, I just want to point out to you, getting in right here, you would have made close to 115, 120 pips. And your stop loss would have been just above the 50 SMA. So your risk in this case would have been about 72, 75 pips. You would have made 120 or 110, 15 pips. So you can see almost a 1 to 2 risk to reward. You would have done really well on that trade. And that's pretty good, so pat yourself on the back if you would have taken that trade, and you would have made some good pips. Let's take a look to see where it's going to go next. And I see price heading down lower. Again, look to your left. We've got a serious major support zone in this gray rectangle, which I've drawn in for you. We've hit that support once, twice, 3 times. Do we expect it to come down the 4th time? And my answer is yes, of course. Well, hopefully it's going to come down. I mean, I don't have a crystal ball, but I believe price, it's going to go up a bit. So what I'm saying is sell on rallies. So that means waiting for price to go up a little bit higher. In fact, price may even go back up to, let me just take a look, up to this area right here. If price goes up a little bit higher, price then will come back down and again test previous support over here. So again, wait and see, or you can just wait for price to break out below the previous, or this candle right here, or this candle right here. Wait for price break out, or wait for price to retest this area right here and then sell. And that's called selling on a rally. Okay, so let's just take everything off the board and let's get to our next pair, the New Zealand USD pair. Okay, last week I mentioned that this was kind of a crazy pair to trade. It was going up and down and all over the place, wild swings, huge impulsive moves to the downside, huge impulsive move to the upside. Breaking resistance here, kind of a false breakout, coming back down and down again. And so I basically said that what we wanted to do is last week my recommendation was to wait for price to either break above the 74.20 zone, which is right around here, and look for evidence to the upside, or wait for price to break below the 0.7270 area right here, and wait for price to wait for bearish evidence to the downside. And that actually happened, folks, with this candle right there. There's a huge bearish candle. If you would have gotten in right there, well, I'm sorry, right there, because you have to wait till the close of a candle. So let's just draw that in. If you would have gotten in right there, yes, the next day it did retrace a bit, but then next few days after that went all the way down. You would have made some huge pips, and that's what we're looking for. So again, with this candle, This candle was the evidence, the bearish candle that we were looking for if we were to wait for a break of the support zone. And you would just get in at the next candle, and yes, you risk the risk in this case. If you would have gotten in right there, let me just take a look with the crosshair tool. Your risk would have been about 100 pips, but you would have made 140 pips, close to 140 pips. Great move. Again, pat yourself on the back if you caught that one. So where do I see from here? Well, I don't see it going down much lower just yet. This is a real wait and see situation. We are at a March 2011 low. So if you went back on your charts all the way down to 2011, you would see that's a low, and I think price is going to stick around this area. It's going to probably go sideways for a bit. It may go up a little bit higher. So really, this is a wait and see situation. May even be a good if we do find a bullish evidence to the upside, may be great for a counter trend trade. I've got that right here. So this could be an opportunity for a counter trend trade where price may go all the way back up to retest the previous major resistance with this gray rectangle. Okay, so that's what I see there. And let's go to our next chart, the USD Swiss franc. Hello. Okay, with this pair last week, I basically said price, wait for price to go higher and then sell at resistance. This is a good trade example to show you about patience, and if you would have waited for price to go higher, it did with this white bearish candle just slightly above the 50 SMA. You kind of wait. I mean, will price go higher than that? And in this case, it was rejected, and price ended up coming right back below the 50 SMA. So in this case, there's a rejection below the 50. And if you would have gotten in at the open of the next candle right there, then you would have made, let's take a look, you would have made possibly about 120, 130 pips. Your risk would have been just above the 50. Your risk would have been, that's pretty darn good, about 40 pips. So you would have made a 2-to-1, 1-to-2 risk to reward trade, and that's pretty darn good. Again, what basically happened here is price was testing resistance, rejected by the sellers. Price was taken back down again, and now we're coming and testing this previous support. So we're in a situation where it's a wait and see. The trend is I'm not too sure where the overall trend is going right now. We're still kind of going sideways. Wait for a breakout. This is my recommendation. Wait for price to come all above the 50 and above the 95.20 before taking a buy trade to the upside, or wait for price to break down and close below the 93.40 and look for bearish evidence to take a trade to the downside. If price breaks to the downside, it could go all the way down to the 91.03 area. Okay, so this one's just really wait and see. And the next pair is the USDCAD, and we'll take a look at that. Okay, taking a look at this pair, last week I mentioned wait for price to go higher, then sell at resistance. It actually went above the 50, price did go with this huge candle and subsequent candles that went above the gray rectangle. And notice that it's staying in a tight range above the resistance here. However, we do have 2 huge pin bars indicating that sellers are resisting. Every time price wants to go higher, sellers resist, bring price down. So MACD is above 0, so there's a bit of a clue there. I expect price to continue going higher, okay, after 1-2 rejections. And my overall recommendation is wait for price to dip first. Again, Sunday trading, we may have price may go up a little bit higher, but I would just kind of wait for price to come back down lower. Once again, to meet up with the 100 SMA, I've drawn that in for you. So wait for price to come back lower, buy at a dip, and then look for bullish evidence to the upside. Okay, and our final pair is the US Japanese daily. Okay, everyone, really quickly, we'll come to the end here. Prices come up to the June 2007 high. That's a major resistance area. Price will either go higher, so you want to wait for a breakout, or